Good morning. Good morning. Good morning. Good morning. Hi. All right. Super. Good to see you. Anirudh, Abhishek. Hi. All right. Prajakta, Yagnesh, Dipalok, Kiran, Emmanuel Santosh. Emmanuel Santosh likha doesn't look like it has started. Okay. Has the meeting started? Karthik. Chalo. Super. Let's get started. How many of you thought through the session of yesterday and went through the slide decks once again, or maybe went through the recording? How many of you did that? You did it? Okay. Prajakta? Chaliye, very well. Okay, Avinash, आपने भी किया. Very good. You took notes, Karthikeyan. Super. All right, let's go deeper today into this journey about mutual fund distributors versus CAs versus doctors and lawyers. And we are going to go a little deeper on that same point today and then bring out certain finer points. Let me ask you something. जब कोई doctor, if a doctor tells a patient, you need this treatment, out of 100 people, how many of those people follow the doctor? 70%, 80%, 90%? People follow the instructions or the recommendations of the doctor. If a CA says this is the right structure for tax, people will rarely argue, correct? Emotionally. Nobody will argue. Many few people. But when a MFD says this allocation is right for your future goals, what happens? सामने से फिर से सवाल आना स्टार्ट हो जाता है और ऑप्शंस क्या है, फ्रेंड्स ने कुछ और बोला है, मार्केट स्टेबल हो जाए तो फिर करेंगे, गारंटी तो नहीं है ना. Now, why does the same educated client behave differently with financial advice? Why? Is it because the MFD lacks knowledge? Not always. Many MFDs today know more about markets than clients know about their own finances. So then why it is really happening? Why is it really happening? Correct. The answer is psychological. Your positioning, the identity, the trust. Because in investing, the client never fully transfers the emotional responsibility. That is the hidden problem. When a doctor gives treatment, the patient feels doctor ki zimmedari hai, doctor is responsible. We are fully emotionally dependent. We transfer the responsibility to the doctor. But in investing, the client unconsciously feels अगर गलत हुआ तो responsibility मेरी है. We start to think कि बॉस सही कर रहे हैं, गलत कर रहे हैं, सही कर रहे हैं, गलत कर रहे हैं. We are always in two minds. That's a huge difference. And this silently changes, the trust, the hesitation, the decision speed, conviction, and even the perception of authority. So today we are going to go a little deeper. Okay. So we will be discussing why financial authority is psychologically difficult to build and why clients emotionally negotiate with MFDs and how smart advisors, can become decision anchors during uncertainty. Because remember, clients don't stay with those advisors only because of returns. They stay because talking to the advisor reduces, confusion and, uncertainty and emotional chaos in my mind. All right. Chalo, let's get started. I'm going to open up the presentation deck as always, and let's see. The psychology of financial authority. Okay. So why clients obey some professionals automatically and emotionally negotiate with MFDs. क्यों ऐसा होता है? So this is what we are going to discuss today. So it's a function of psychology, trust, authority, and risk. It's primarily a function of these four things. Okay. Now, the core problem is clients don't emotionally outsource the financial decision 100%. Doctors absorb the responsibility psychologically. MFDs leave it emotionally with the client. So when a loss happens, the client still feels it was their fault. How many of you are getting this? I want all of you to read this sentence on the screen in your mind. And then write in the chat box once you're 100% aligned with what is written. This could be that for the very first time in our professional career, we are reading something like this. Not sure, but could be. This is deep in the world of psychology. Doctors absorb responsibility psychologically. Patients and the relatives of the patients transfer it to the doctors. MFDs still do not take complete responsibility. We leave it emotionally with the client. Read it and write, I'm ready to proceed. Only then I will move to the next slide. अच्छा अभिषेक आपका ईमेल मुझे मिला है so I've given it to the content team. Once the thing is ready, I will do that session. Okay. How can we show that we are on their side with them? Nilesh, there is only one way, by asking questions. हम लोग अपने बचपन के दोस्त को क्यों नहीं छोड़ते? हम लोग इसलिए नहीं छोड़ते because we know their life through and through 100%. And that friend of ours also has the feeling that this person knows me 100%. वो तो मेरा सब कुछ जानता है. When somebody will know you 100%, it's unlikely they will leave you. So that can only happen when you are listening more and speaking less. Let's move ahead. So what is that invisible psychological contract? Every profession operates through an unspoken agreement. Every profession operates through an unspoken agreement between the practitioner and the client. Okay? डॉक्टर के सामने क्या है? डॉक्टर के सामने बोलता है, you guide, I will follow. The patient surrenders judgment entirely. CA, you structure it, I will comply. अब बताओ कितना पे करना है टैक्स, हम पे करेंगे. The client defers, to expertise and follows the prescribed framework. खुद का दिमाग नहीं लगाते. Lawyer, the client leans onto this lawyer, counsel, and accepts their professional judgment. And each of these people are solving a problem of today. The MFD, there is a difference. You give them options. You are suggesting. The client is deciding. There is a difference. In the case of doctors, do the doctors give you suggestion of medicines and then you decide whether वो medicine खाना है कि नहीं खाना है? The investor retains the final authority and carries the weight of every call. In every profession, the emotional burden of decision making rests with the expert. In finance, it stays with the investor. That gap between advice and accountability is where trust breaks down. This is the core tension. So why financial advice feels emotionally unsafe? It feels emotionally unsafe or delayed or uncertain because health decisions, CA decisions. So they have got a visible feedback. Tax has got clear compliance. Legal has got urgency. Investing offers none of this. The outcome is delayed, emotionally loaded, and socially influenced. Clients never feel complete certainty, and no product changes that. Nothing. So clients are not buying products. They are buying emotional permission to stay invested during uncertainty. They're not asking, will this give me return? They're asking silently, will I regret this later? So who is the real competitor in your business? The real competitor in our business is not another advisor, not the direct plan, not any fintech platform as much, but a future regret. Clients avoid decisions for fear of looking back and wishing they had chosen differently. Future regret. Social embarrassment. A bad investment triggers fear of peer comparison, spouse's reaction, and not just financial loss. The real competitor is emotional uncertainty, not knowing how they will feel after a decision, and that keeps the clients paralyzed and disengaged. And then there is a fear of being wrong. People fear being emotionally wrong more than financially wrong. Self-blame outweighs. So what is the information superiority? Information superiority is not authority. Giving more knowledge, giving more information is nothing superior. Real authority comes from emotional contentment, creating calmness and decisiveness before advice is accepted. Given your goals, this is the rational path. That is far superior than saying, "Aapko jo comfortable lage ab karo." The industry has trained advisors to explain, not to lead. Too much explanation quietly erodes the authority. We walk into the meeting looking to speak. So who is this modern MFD? Okay. The modern MFDs are those who can help clients tolerate uncertainty, prevent emotional overreaction, and hold long-term structure together. Clarity, anchoring, leadership, emotional containment. Reduce the complexity. If you keep reducing complexity, potentially the authority level goes higher. Keep communication simple and direct. Repeat the core principles consistently. So what do investors actually buy in? They buy in when there is reduced regret. They buy in when there is emotional safety. Where they buy in when there is absolute clarity. And finally, they will buy in when they are staying in power, the conviction to hold through volatility. Advisors who create this feeling consistently become irreplaceable. Finally, authority is built when uncertainty rises. Your calmness is far stronger during clients' fear times. Remember, authority is not created when markets rise. The truth is, true financial authority begins when your calmness becomes stronger than the client's fear. And finally, that signal you will receive when clients feel calmer after talking to you, speaking to you. All the best, everyone. Have a great day ahead, and I'll speak to you tomorrow exactly at 10:10. Take care, have a great day, and grow your AUM quickly.